Now, baby,
Hello, and welcome to Gold Backtesting session number. I hope you guys are having a fantastic day. I am looking forward to this one. So where we left off last week, we were backtesting the turtle wave. So backtesting the turtle wave, in case you have not seen, session number 1 is a strategy and it's proving to be some powerful stuff. So we left off last week, I was saying how I'm going to continue backtesting a couple of trades. The aim was to get 30 to 40 trades.
when I got the invite, let me wrap my arms around you, cause I can't go home without you. And my heart just vibe with you, babe. Wanna go sky high with you, babe. Gotta bring you close to tell you
That should do it.
that you're my lucky strike. And I got to tell you, if you didn't know, then I got to tell you that you're my lucky strike. And I got to tell you, if you didn't know,
Okay, how's that?
you're my lucky strike. Cooler than cold, I'm all in.
Bring it on down. Okay.
So
Down more.
the way that you roll.
Okay, how about that? Mic check. 1, 2. That sound better? Y'all good? Turn my level up a little bit. Okay. Right here. Okay. How about that? Okay. We're leaving it there. Me on the music. Mic a little bit more. Do your thing. Do your thing. Getting some technical things in order. I'm speaking.
Good.
Yes, you hear me? How are things going? That sound good? Okay. Let me know. I was deep in the thought. Did you guys even hear me? Okay. Keep everything as is. Cool. All right. Let me see if some comments have come through. Chat. Not seeing it. No.
Sorry guys, this is part of it.
This is R&D in real time here. Okay, I can hear my voice over there. That sounds good.
Okay, we'll check the chat.
On my okay. Okie dokie, lemon squeaky. Okay, let's start over. So what I was saying is, if you have not watched the first session, we went through a couple trades. We wanted to get about 30 to 40 trades in the bank, just to see what the win rate and the success rate of the strategy is just using the 200 EMA. Okay, seeing the chat now, Laka. So we wanted to see just what the success rate of the 200 EMA using that for direction was. And now we're going to build up a couple trades on there. So the aim was to get 30 to 40. I got 38 in a 2-month span. So on that, you can see here that here are the stats. Now we used a 1.25R target as how much the risk reward was between SL and take profit. So it's 1.25. Why 1.25? Well, because with a positive RR like that, you can afford to have a sort of like a 50% win rate and still have a little bit in the bank. Because for every 4 trades you win, you sort of bank a 5th trade. You bank a 5th trade through that process. So as you can see here, of the 38 trades which we have here, all of these are the 38 trades taken right after 200 EMA. We had 24 wins, 14 losses, and that equated to a positive 16R. So if you're risking 1% per trade, it's about 16% over the course of that 2 months, over the 38 trades. Now, I did pick up on something. Using the 200 EMA, the turtle wave works really, really well. Are we able to hear the music? Like, I can't hear it in my ears. Just let me know, Chad, if you can hear the music playing. Or is it just me? Anyway, so we can see how this strategy works best when gold is in very large trending markets. So you can see here where gold makes really big moves, takes a couple, like 1 to 2 days for it to return, and then returns up to the 200 EMA. That is the ideal scenario for the turtle wave. You'll see situations where it ranges a little bit, like this ranged from Tuesday the 11th till Wednesday, Tuesday the 11th till Wednesday at 2. So you can see when it ranges, that is no-go territory for the turtle wave. See, that's here, that resulted in these 2 losses back to back. Now, we do have the rule, you have 2 bullets with the turtle wave. If you're wrong twice, likely it's due to you being in a bit of a range, and you're going to wait until the red range is conclusively broken before you attempt to go in again. So those are some of the insights we found with the turtle wave. So what we're going to do today. So we were looking at how the turtle wave's success with a 1.25R profit target, and so far very positive. And these were off the months of June and July of this year. So what we're going to do now for a bit is we're going to see how does that compare to waiting for longer moves. So you can see, for example, here, take profit was just shy of what the extended move was. That was a loss. See, take profit here was just shy. This move ended up going way more. So what are, say, similar here? So we want to look at what is the success rate. Yeah. Pull, There we go. So we're going to see what the success rate is of the turtle wave if we extend the price target, let's say to a 2R, while keeping the exact same entry criteria and everything the same. So we're just going to trace over here, and we're going to build the stats up. So I'm going to take the exact same trades that we took before, and I just want to see what the success rate of this strat would have looked like for those exact same 2 months, because we want to compare apples to apples here. What the exact success rate of this turtle wave would have been in a 2R scenario. So as you can see here, trade 1, that wouldn't be a difference because that was a loss. Fine. With trade 2 over here, if we had gone to a 2R, and this is going to... There we go. So we would have still had take profit there. So we're going to compare this one. Let me just duplicate this bad boy. Clone. Put you over there. This is going to be our 2R stat target. We know the number of trades is going to end up 38, but the wins and losses are going to change. Now, bearing in mind, as soon as you... We'll put this at the bottom here. As soon as you change what the profit target is going to be, you are affecting what the win rate is going to be. A 1R trade is easier to come by than a 2R trade, and a 3R trade, so on and so forth. So we are expecting the wins to losses are going to change just a little bit here. But already there I have 2 trades, 1 win, 1 loss. Going back down to here, 2R would have resulted in a win there. So we're at, okay, I'm going to lose track, so I'm going to type these out so far. 2 wins, 1 loss. And if we go further forward, that one was a loss, doesn't equate. That one was a loss, doesn't equate. And you can see here, as soon as you get 2 losses back to back, you know there's a good chance you're stuck in the range. And that is when Turtle Wave is in no-go territory. So that was with 2 losses back to back there. Equated to a win here. Here's where it might get a little bit sticky. and we just made the 2R there. But you can see how that win could have turned into a loss because of the extended target we're placing on the strat now. But still worked out there. And this one also might be a little bit sticky. Now you see there is where a win would have turned into a loss because we were expecting a larger move. So that would have been a loss there on the 2R, and that was a loss there. But even though we are going into this knowing that we're going to have maybe a slightly worse win rate, the extra additional R that we get per win might maybe make up for it. And this is what we're trying to figure out. So again, just to walk back, so those of you who didn't watch the first one, just to walk through what the entry criteria of the turtle wave is. So basically what you're waiting for is you're waiting for price to either close above or reject below the 200 EMA. This is in a bullish trend and vice versa in a bearish trend. Once we get a closure like this, once we get a closure above, like so, what you're going to do is you're going to take, and this is only from about 8 o'clock, so only take the pre-London Open, so from 8 onwards. So you wait until that 8 o'clock closure. So here, there, so that 8 o'clock there, we came in, rejected, closed below. So I would have had sell stops 100 pips below there. And then take about 100 pips above that little close, entry up there. And we have a 50 pip stop. And now we're going for a 100 pip target with the 2:1. So that's basically the entry criteria. It's using no other confluences, just the 200 EMA and just price action. We are, as we go along, going to build more confluences into it to see if that makes the success of the strategy better or worse. But first, just bare bones, we want to see, listen, just using the 200 EMA, basically like rookie trading, how successful is the concept that we're trading? Dylan Savage in the building. What's up, my good man? Hope you're having a great one. So yeah, so that's the basic thinking behind the strategy. It's literally just waiting for, listen, price action to cross the 200 EMA. Do we close above? Do we close below? That is it. So looking here, see here we had this closure below, went for 100 pips below, just wicked this in before reversing, so that was going to be a loss there. And similar there, a loss there. So you can see price ranged for a while, and we got caught out in that range, broke out of the range. But even with that break, we could have maybe attempted to enter there, would have maybe just made TP there. But like I said, it's 2 bullets per session, or per day rather. So once you get 2 losses, get out. So that would have been 2 losses back to back there. Just gonna add them in. Here we would have attempted 2R. What is that noise I'm hearing? Here we would have attempted 2R. We have just gotten that, so that was a win there, and then a loss on there. So our losses aren't going to change because our stop loss isn't moving, but our wins, the losses might change because we might add losses to them, but the losses we already had on the 1.25R stat, those aren't going to change because we haven't extended what our stop loss is going to be. So as you can see already, there is quite a number of trades which did give you at least a 2R move before closing out. But what we want to see is comparing those and subtracting those from the losses, do we still end up with more than the 16 R net profit? Now, granted, this is only for 2 months worth of backtesting. So this is only the June and July months. So things are going to be a little bit different as you start to add more trades and more data into the equation. So you don't want to stake your entire reputation or your entire account on just 2 months worth of data. I think ideally, in a perfect world, you would at least get 100 trades of data in. Here we only have 38. So things are going to be a little bit different the more data you put in, but in the beginnings of a back testing, you want to just collect some data, see if the proof of concept works in the first place. And from there on, you're like, okay, cool. Like proof of concept is there. This seems like it seems to be viable. Let's invest more time and resources into really fleshing it out, which is essentially what we're doing together now. So you can see how here, actually a lot of these trades are doing bloody well with that 2R target. This one might be a little bit stickier. Do we just, no, we just miss out there. So again, you are going to have more losses naturally over time having a extended target, which is why some of these traders who like the negative R traders, your 10 pip gang, a lot of them have really decent high win rates. Take Don, the most famous negative R trader, although that didn't work out for him too well this last little bit. But you also get like a friend of mine, Millennial FX, Miles, very successful negative R trader. And because they're relying on those smaller moves, 10 pips or something similar, the win rate tends to be a lot higher because the shorter the move that you're looking for, the greater the likelihood you're going to find it. As soon as you start extending these, this is where it gets a little bit stickier, a little bit hairier. And that would have made it. Made it? Yeah. Okay, so price tapped in, didn't break the low. Oh, no, this was a loss. This was a loss because this candle tapped us in, that candle tapped us out. So that one wouldn't have worked out. Let me just keep it to the original 1.25. That was an unlucky one though. What we can also looking at is of the trades that we do lose. And this is a great example. Let's spend some time here. Of the trades that we do lose, how many of them wick us out of the trade before then reversing in? So you see this is one example where the trade was wicked out, and then the very next candle on the 1.25 would have taken gone to TP, and on the 2R would have reached. So there is also a something to be said for going through all this data again and modifying what your stop loss is going to be. Either making the stop loss a little bit bigger to avoid situations like this, or if most of your winning trades don't actually require a 50 pip stop, moving the pip to a 25 pip stop, keeping the 100 pip target, and suddenly you turn a 2R trade into a 4R trade. And what are the stats on that? Which is something I'm going to do also going forward. So it's all about trying to figure out, because every strategy starts off with ideas, like what can I do, what shouldn't I do, what seems to work best in the long term, and then coming up with rules based on that. So what starts with an idea then develops into an actual full-fledged strategy. Trading Dio, what's up, my man? Hope you're having a fantastic one. Dylan looking very good at it, extremely promising. Listen, the turtle wave is making waves, man. The turtle wave is doing the thing. So you can see here, this is where the extended target would not have done too well. That would have ended up with a loss. However, you do manage to catch, I think this one will make it, a nice little one there. So that so far is 10 wins to 14 losses. Now you can already see, well, we'll see when we finish the data, but the 1.25R had 24 to 14. So you can already see this one is skewing a little bit the other way, but we do have the advantage of a little bit more R. Hey, we have my darling girlfriend in the chat there. Sup, honey? Hope you're doing well. Yeah, so I think we're doing really well with the stats here. I'm really curious to see what the RR is going to be at the end here. So that's one loss, one win there. 11 to 15. There we go. Okay. I think we're almost at the end here. Just a couple more days worth. Would this have gotten to R? Yes, it would have. That makes... What will also be really interesting to look at is if we look at the 200 EMA, let's say, because right now we're looking at 2024's data. Now, gold is in a very particular place this year, dancing between all-time highs, a little bit of a pullback, back to like all-time highs, a little bit of a pullback. So it would be interesting to see what a strategy like this, how successful it would be, let's say last year in 2023, where you weren't trading as much in between all-time highs. There's a little bit more room to breathe. The markets are slightly different in condition than they are now. It would be really interesting to see, like, okay, cool. In conditions such as that, how well does the strategy fare? Because certain strategies are going to work better than others at different points in the market. So there are going to be some times in the market where, listen, this strategy just doesn't work for whatever reason. And then suddenly market conditions change a little bit, and now it works like gangbusters. So, which is why the industry is so full of like, there's multiple methods to trade. You get people who do SMC, you get people who trade breakouts, you get people who trade trend lines, and like all of these methods work to a certain degree, but they work best at different times for different reasons, different market conditions. And you get some people who have a brilliant, let's say, first quarter of the year, and using that same strategy in the second quarter, the results aren't quite the same. It's going to be slightly different season to season, day to day, week to week, quarter to quarter. Jared Pillay, how's it, man? Just wanted to drop by and say congrats on your progress so far. Been following from 2Gs. My man, thank you kindly. I'm enjoying the journey. I am enjoying the journey. I cannot lie. It has been a jam. Okay, so you can see here, that's a win that now turns into a loss because of the extended target. But so far, anecdotally, looking at the data we have so far, it does look like the 2R is very promising, which is interesting to me because so far I've been trading it with the 1.25. So this might be enough evidence to suggest that, listen, maybe I should think about doing the 2R. Now here would have been a scary trade to be in. And that's another thing with, so far, the turtle wave does not have break-even criteria. What I've noticed is, and evidence like this, is you'll break out, you'll get really close to where take profit is, and then price action will want to retest the 200 EMA. So going break even too soon with the turtle wave seems to negatively impact results. It is something I haven't quite back tested a lot yet. So again, with the data, it might show that, listen, it might get you out of some winning trades, but it might also stop you from hitting a lot of your losing trades, and the RR from that ends up in a net positive. So it all depends. So that is something to test a little bit more moving forward. But anecdotally, so far, the way I've been forward testing it and the back testing I've seen, it looks like this is one of those like set and forget type situations. Like once you're in the trade, it's either take profit or stop loss, because it can retest the EMA before going forward. Brian, nice work. Ed, still need to share that Word doc with you. I'll make a, oh yes, I totally forgot about that, dude. That's actually gonna be because Brian's also been doing some work behind the scenes. So that's gonna be nice to see what he's come up with. Yeah, guys, like drop a like drop a like on the video. Let's get the likes up. There's what are the analytics of this actually? I have not been looking. Hey, there's like 14 of us watching. Nice, man. Can we add some likes in there? Show me some love. Show me some love. Get some analytics there. Because how many likes do we have so far? Okay, the likes just shut up. Thank you. Appreciate you guys, fam. Now, someone who's been paying attention. Did I count this win yet? I'm not sure. I got into a monologue and I have lost track. I may or may not have counted this win already. I don't think I did. Okay, if I added that win to the tally already, just let me know. But I'm going to add it now just in case. As you'll quickly learn to see, my attention span, once I get distracted, is not so good, fam. We're going to make this one. No. Okay, so that's going to turn into a loss. I love how, like, because with the previous strategy, we had, Dylan says, no, we didn't. Okay, awesome. So with the previous strategy, all of these trades only ended up being 14 losses. So already up to 18. So there is some, this one's also going to be quite interesting in terms of the timing. What I haven't also taken into consideration here is what the timing of these trades are. I've just realized, because what I was doing is I was only taking the crosses that happened in 8 in the morning to 8 o'clock in the evening. So that 12-hour period. So it's going to be really interesting to see how long some of these trades go. So that's another thing we're going to look into back testing is like, okay, once you enter a trade, what's the average time the trade runs for? So you know, like, listen, all the losers happen quickly. So if a trade takes a little bit longer, you can be a little bit more confident in leaving it running. Or maybe all your winners happen quickly. If the trade ranges for too long, you're probably on the wrong side. Get out. So that's like price and time is also a factor here to add to the rules. So if you see like a trade like this happened at now. This happened at 5 in the morning. We shouldn't have taken that trade to begin with. Should have only entered the trade there, so I might have not been paying attention. We're on the right time zone, eh? So I might not have been paying attention when I entered this one, but because it's part of the original stats, I'm not going to change it now. But that's something to go back on and just look and make sure that the times we were entering these trades is correct. But yeah, so this one was a 5:45 till TP at 3 that afternoon. And this one happened at 6, out very quickly. So that's 1, 2, oh, wait. Get the extended target there. So yeah, so these are all factors to consider. Because like the reason why I'm taking 8 o'clock in the morning is that's when I'm awake. That's when I'm in front of the charts most days. So those are the only stats I'm actually interested in looking at. Other like the turtle wave does work during multiple sessions. There are a lot of times during Asia where it'll cross and make a really good move, but you can't catch 24/7 of the moves. What we can look at in future is maybe building the turtle wave into a EA, into a bot. And like, listen, once we have concrete rules, like, listen, this is how you're going to trade it. Oh, that was a lost trade. Laka. This is how you're going to trade it. Because it's so mechanical, once this crosses, you take it 10 pips from there. So once we cross the, just to explain it one more time for those of us just joining us. So once you cross the EMA and close above, you take the high of that candle, 10 pips above that, buy stop, and then now what we're doing is a 100 pip target, 50 pip stop loss, 1:2, and that's the trade. So because it's so simple, you can actually program a bot to be like, okay, once it crosses, do this, take profit there, stop loss here. Once you hit 2 losses, stop trading for the day, wait until the next day's beginning of London session or pre-London Open, start again. So because we want to get to this place where it's mostly mechanical, if we can get it there, that is what we're going to attempt to do. So now, let's just make sure the number of trades here correlates to what it should. What is that, 19 plus 18? Is that 38? I can't math. 37, we're missing a trade somewhere. Okay, so let's go back. We're going to count just the winners. So that's 1, 2, 3, 4, 5, 6, 7, 8. 9, 10. That was a loss. 10. That was a loss. 11. 12. 13. 14. 15. 16. 17. 18. 19. So the wins are correct, so we must have missed a loss because I double checked that they were indeed 38 trades. Okay, Laka. So it's 19 to 19. That's a 50% win rate, but it is 2R as opposed to 1R. So we are still 19R up. That is not bad for 2 months of work. So we can already see over the same 2 months, yes, we increased our losses from 14 to 19, decreased our wins from 24 to 19. However, we're still 3R up in comparison. So all those extra additional losses that we incurred, is that the right word? Incurred. Still wasn't enough to dissuade the positive R that we got, which is actually quite cool. Now I just want to zoom out here so you can see all of these trades as they happen. So you can see how I was saying how the turtle wave works really well when price is trending quite heavily. So you see here, range, we caught loss here. We trended for a while there, trended back down, started to range where we caught some losses, trended back up, trended back down. I think we still caught some losses there. Now here's where price got into a little bit of a tight range, or not a tight range, into a wide range rather, over here. So going to a little bit of a wide range here. So we had a mixture of like, okay, some wins, some losses, some wins, some losses. So we also need to look at like when gold does start to range, how big of a range or how small of a range is acceptable range. So you can see here some wins, loss, win. It works really well when we're trending. But you can see here we got 1, 2, 3, 4 losses in a row as soon as gold got into a bit of a range. Like if you see here, if you take the top of that to the bottom of that, so in a 20 point sort of space, that range too small to get a good win. So we got 4 losses in a row there. The tricky part is identifying a range before the range actually hits you. It's really easy to see the range once it's happened, but like as it's going, it's hard to tell when it's going to range. Okay, Tissy, hi Ed. How do you determine your SL and targets in the strat? See, Tissy, that's what we're trying to figure out here. So far, the stop loss has been 50 pips, and we tried a 62 pip target, so 1.25R with the first backtesting session we did. Now we're trying a 100 pip with this session, and we're trying to determine which one is more profitable than the other. So that's exactly what we're trying to determine with this strat. So, and once we have the data to be like, listen, when your stop loss is this big, your take profits is that big, and you use this strategy, this statistically is the most profitable way to go about doing it. So that's what we're trying to determine with this backtesting session now. Michaela Naidu, hello. Thank you for joining in. Dylan, in terms of sessions, how many wins and losses happen out of session? That's actually a bloody good question, Dylan. It's a bloody good question. Let's have a look-see. Let's have a look-see and try and determine that for ourselves right now. So, I'm gonna start, I think, on the 5th of June. Yeah, so this was all in London. Took a loss, and into New York, we took a win there. So what we can also see, let's actually get some anchor text going. So this is going to be for the 2R strat. 2R strat. I can't spell strat. 2-hour strat. London. We'll just do London and New York for now because I haven't actually done the back testing for Asia yet. If we have some time now, I think we do. We can do that together. So we're gonna count the wins because we know what the wins were. There was 19 wins, so we're gonna count the wins for this was New York, got 1. This one was London, so it's 1-1 for London and New York. See, I love data capturing, guys. It's this part of the trading I enjoy. The whole like trying to make sense of what is a vague, very chaotic environment. Rux, my man, how's it going? How's it going? We got lost there, win here. This was during New York. Okay, wait, let's just move some of these out the way. Okay, 1 win for New York. That was a loss. That was a loss. And this was London. So 1-1. Because what we might end up finding out is like, hey, listen, most of your wins or most of your losses happen during this session. Maybe it's worth not even bothering with that session. The RR at the end ends up being better. Loss. This was London. This was... So this one happened late New York, out of session into Asia. So that was London. We'll call this one, okay, out of session for when TP was hit. Or did we count it from when the trade started? I'm not sure. Okay, we'll know what that means. We'll know what that means. We can decide on some parameters a little bit later. This one was in New York, 1. This one was in New York, 2. So 4 for New York. This one was in London. Those 2 losses, those 4 losses back to back. See, if we can figure out how to avoid stuff like that, we will be freaking golden. What did I say now? Where was that win? London. I'm telling you guys, if this strat works out, this is what's gonna retire me. This will be the thing. This one was New York. No. This one was a loss. This is a cack loss here. That little wick out there. Okay. This was New York. Although I will admit, besides this one, there is no other loss that happened where it was just a wick out. So we might maybe want to look at, we definitely don't want to extend the SL, like for one trade, but we might look at maybe like decreasing the stop loss and trying to get a better R that way. Might be something we look at for session 3. Those 4 losses, what sessions were they? It would either be New York or London. This one was London, and that was New York. This was London, and that was New York. And these were at the very beginning of the sessions. It was just as... Oh, this is pre-New York, actually. Because it was before the 3:30, so this is pre-New York, and this was in London. So this one being in New York firmly. This was almost a win, but with our extended target turns into a loss, and the loss happens as New York is starting. Got that one. Loss, win. This one was in New York. So New York taking the lead. We should probably also look at which sessions of the majority of losses happen in. Although, but now, anecdotally now, it looks like it's about an even trade between the two. That is New York. and that one was London. Yeah, it looks like a pretty even spread. So New York and London seem to be good together. And this one was out of session. I think we should, what we should probably do at the end here is just trade all of the out of session ones, reverse everything, wipe the board clean, trade all the out of session ones, and see what that would look like. Because this one also will count as out of session. I take 8 o'clock to 8 o'clock, but technically at that late, it's like not, it's still technically in New York session, but it's like late New York. So what we might look at is like, okay, after 8, between 8 p.m. and 8 a.m., how many of those moves happen? That was in New York. And that one was, it started in New York, take profit at the end. 9. This one entered London, TP in New York, and now it was New York. Okay, no, it seems like a very even spread with New York just edging it out. So if you were time starved, that was it, eh? Yeah, that was it. So if you're time starved in the day, you might maybe want to look at like, okay, like I can only trade one session today. It looks like New York might have an edge over London. But yeah, let's go back. Okay, I'm going to do it like this. Let's go back here. When did that start? June. Let's go all the way to June. And let's see what it's like if we, let's do that a little bit. Let's see what happens when we trade just the Asian session. And we can also, like, for those of you who don't understand the strat now, this would be a good opportunity to explain it again. And let's see if we trade just after 8 p.m. Here we go. Just after 8 p.m. Okay, I need to switch off all these other indicators, because I just want the 2 on the EMA. All of y'all, go away. Go away. Don't show me Asia. Don't show me the pivots. Nope. Don't want to know any of that either. Nope. Nope. And nope. Nope. Don't want to know the Asian range either. What is that? Where's... What have I ticked here? Chat, any of you seeing where Asia is? Why is it still showing me the Asian session? Oh, session labels, that's the one. Okay, I don't have to get rid of this. I have unticked everything. Okay, not a train smash. Ed, I used to trade EMA crosses. I'll recommend you try combining it with the 20 or the 70, or use the previous high and low to determine the target, more room. Yeah, so that's what we're going to look at down the road. Is we're going to look at which confluences with this, because what I'm trying to do is to make this strat as the least amount of complicated possible while still keeping it successful. So we're trying to systematically add one variable at a time to see, okay, cool, this is the least number of confluences I can add to keep it as simple as possible but as profitable as possible. To try and almost keep discretion? Yeah, try and keep discretion to an absolute minimum, with the end goal of being able to turn this into a bot where it's like it's a systematic. Listen, the rules are so simple and so mechanical. You can do this. You can replicate this. A robot can replicate this. Basically, is what I'm trying to say. I think the line. I think that is the line you added there. No, this is the, what's this thing? This is the indicator. Anyway, not a train smash. So what we're going to look at is, that's 3 per second. Okay, so we're going to look at the start on the Monday. Okay. Monday from session open. So what we're looking at is for price action to either cross over or reject that 200 EMA. And we're looking for all the ones that happen during, after New York, before London, is what we're looking for here. Yeah, getting close. Slow it down a bit. Let's see, and we're still in the Asian range. So in the right point of time. Oh, are we? No, when is this? No, this is in New York. So already calculated for that one. We're looking for anything that happens after 8 o'clock. Okay, wait, let's speed this up again. This is when the tedious part of backtesting becomes a thing. But yeah, so what we'll be looking for here is just to determine, listen, is it worth trying to trade Asia? Is it good for us just to let Asia go? No, that's in London. Is London and New York the ones where all the magic happens, or are we missing out on some profits because we're not trading that Asian session? So this is what we're trying to figure out here. But yeah, let me know if this strat's making sense, if what I'm doing is making sense thus far. See, there we go. There we go. That's what I was looking for. So we had this close above. So we're looking at the high of that candle. 10 pips above there, roughly speaking. Want to go long from there. We're going to go the 50 pip stop. And this one's a 1,000 pip move. What are we doing? Let's go with the 2R. And let's see how that goes. I do not like that color. That is hideous. That is ugly. That's better. Okay, so let's see how that would have worked out. First Asia one. Okay, would have tapped us in, gonna come in and straight up decimated. Lovely. Okay, moving on. I'll tell you one thing. Even though, and that's what I was saying about. Look at that. Would have wicked us out before going, and that's also something we can look at, Chad. So we saw for London and for New York, when we were wrong, we were straight up wrong. It went multiple pips in the other direction before it even reversed. What we might end up seeing is like, no, listen, if you enter during Asia, you can fake you out, hit your stop loss, and then reverse on you. So if you're trading during Asia, maybe having a slightly bigger stop loss, like how far past the 50 pips did this go? So maybe having a 100 pip stop loss if you're doing the Asian sessions might be a little bit more of a profitable way of going about it. So these are the things that the backtesting sort of reveals to you. So a lot of people like when you're backtesting, you're simply just trying to collect data. Like, listen, what happens? How does price action move? How can I use that to inform how I trade? Because a lot of these strategies that we use today, all the typical like breakout strategy, open range strategy, all of those are just ideas, based on looking at what's the word I'm looking for? Of patterns. Like, listen, price tends to do this, and thus I've figured out that I can capitalize on its tendency to do this by doing that. So all strategies start with an idea that then needs to be pressure tested, and then you can come up with rules as to why you're doing certain things, this is in London. Why you're doing certain things, what are the rules for it, why do you go for this target, not that target, why is your stop loss this big and that big? It needs to be informed by something, and that is when you collect data. Yeah. Now, looking for just Asian range sessions is going to be tedious AF. But it's going to be good to answer the question, like, listen, do we want Asian range sessions? Is price action way too weird during that session? Do the Japanese guys not trade gold in a way that is conducive to this particular strategy? Those are all things to be found out, which we will find out together. But yeah, Chad, I asked if you guys have it figured out. Rion, yeah, 100%. Okay, good. Like I said, like I love the fact that this is New York. I love the fact that this is a very simple strategy. You could teach this to a 10-year-old, and they'd be able to figure it out. When is that? Here we go. 8 o'clock at night. Okay, let's have a look-see here. Did we get this is a close though. Slow it down. Yep, got a close with that candle. So we would have taken 10 pips above that. Would have entered buys there. So that would have wicked us in. Would have gone 100 pip stop to a 50 pip stop. Misses 0 there. 100 pip stop, 50 pip stop loss. This is after 8 o'clock in the evening, and what happens? Speed you back up. Yeah. Keep going. Keep going. This shouldn't be as entertaining as it is. I actually love watching stuff like this. Okay, ranging like a mofo in between that Asian range. Oh, beauty. So there we go. So that would have ranged, oh, this looks like the whole day. What is this? From 8 o'clock that evening to New York, and this is probably news induced. So that was a bit of a 50-50. So, but yeah, you can see that one ranged the whole day. 2 is to 1. Lovely price action. And by lovely, I mean that sarcastically. So yeah, so that one would have worked out. I think we're at 2 wins thus far. No, 1 win, 1 loss. Kyle Jacobs, Ed, have you tried the RSA with that strat? Not yet. Not yet. It is on the list of things to try out. I am going to do a lot of back testing by myself. Your boy wasn't paying attention. I should have actually tried to capitalize on that already. So let's see. Because that would have closed, would have... what time was this? At 9. So that was valid. And the reason why I take the 10 pip is I've seen a lot of the trades like to dip in, do this massive pullback first, and then collapse. So the 10 pip gives you that little bit of a buffer to getting sucked into the trade too early. And wait, would that have made it? Let's have a look, see here. We don't know yet. So that kind of would have tapped you in. It's going to range for a bit, and did that wick us out? I think that would have wicked us out, Chad. Ah, shit. I think that might have wicked us out just before hitting TP. How you like them apples? Let's see. Oh, check that. Pinpoint sniper to TP. I mean, sniper to stop loss, and then the reversal. Would you look at that? That was at 3, and this would have happened at just before New York Open. That's enough to make you drop kick a baby. Like, honestly, that is rage-inducing. Ed must run. Love this. We'll see the recording strong. Shot, man. I'm glad you guys are enjoying. This isn't even a real trade. Like, I'm just backtesting. I'm backtesting a session I wasn't even thinking about trading anyway. But that pissed me off. Like, that pissed me off, actually. Oh, but then Chad, this happened to me yesterday, actually. Turtle Wave, yesterday, after CPI, tried to... What did I try to sell or buy first? I can't remember. I've already buried the memory. I think it sold. I tried the continuation move off the sell. Got wicked on the stop loss before it reversed. No. Did I try to buy back after the sell? I can't remember now. I've really blocked this memory out. I think I tried to buy up, got wicked on my stop loss, went for the sells again, wicked on my stop loss, both of them right to TP. I'm like, mother trucker. That is infuriating. Like, oh, that is infuriating. Tony saying, what's the indicator? Oh, this is the 200 EMA, but enough to drop kick. I don't agree, but I understand. I'm not saying I would drop kick a baby, but it makes me want to. Okay. Let's do one more, Chad. Let's do one more. Looking for something in Asia, crossing that 200 EMA. This is fun. That is before 8. Oh, wait, to close above though. Now, Chad, this is one of those situations where, and this is why I introduced the 8 o'clock thing, because a lot of these like little wicks here, because technically, I would have seen that as like, okay, we hit the 200 EMA, we rejected, and it would have been very valid to attempt to sell that rejection, and that would have sucked you in, just, and then reversed on you quite quickly. Which is why I don't really like, and it would have wicked you out too. Which is why I don't like the pre-London, or like the anything before 8 o'clock. But then, did we get a close above afterwards? Close above, and this would have been already into London, so I'm not going to count that for what we're doing now, because that's already been accounted for. But that one would have wicked us out if we're doing that pre-8 o'clock trade. Would have been a beautiful trade if you had waited until pre-London Open to trade that. That would have been absolutely marvelous. Okay, let's not end on a cuck one like that. Let's end on a better one. Is that a Chris Rock reference? I don't even know. Listen, I grew up on Chris Rock, okay? So I probably internalized a lot of his jokes without even realizing. I think he was my favorite comedian growing up. What time is this? 7:45. Okay, we'll take it. We will take it. We will take it. 100 pips below that. Come on, Chad. Let's go for the win. Let's go for the win. Let's go for the win. This isn't even... Like, this isn't even demo trading. This is like literally like I am back testing. But I'm emotionally attached to it. It's actually ridiculous. Okay. 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 Man, screw Asia. Okay. Well, so far, trained Asian session, because that's what, 1, 2, 3. 3 to 1. 4 to 1. Oh, no. Yeah, okay, we haven't gone that far. 4 to 1. 4 to 1 is not that bad, to be honest with you. But yeah, Chad, what I'm going to do is I'm going to continue this. I'm going to continue this trend. We're going to see what Asia trading the turtle wave just during Asia is like. I got a little bit of time. Let's do one more. But so far, it's looking like Asia's chalked, my gang. It's looking like Asia is chalked. What time is that? No, that's in New York. It looks like New York and London are your friends. Asia ain't looking so hot preliminarily. But like I said, there are times in the market where you're, like, for instance, right now where market is. Okay, what's happening here? Okay, all right. Let me lock in. Let me pay attention. This came in and that. Okay, so that was the first cross there. Well, that was a rejection. 10 pips below that, nothing happened. So that close above, we got that there. Also, this entry criteria of, like, do we want the first candle that touches the EMA to be the one that signals? Do we want to wait until see what the second candle after that does first? So we avoid some of the fake outs. That's also stuff to consider. You must consider all the possibilities. Okay. Nice little 2R here. Would have entered 100 pips above that candle. And let's see what goes down. Yeah, come on. Give daddy a win. Come now. You know you want to. You bastard. Nah, Dylan, I think you're right. Asia might be choked, eh? Asia might. And then the worst part is, you're not even wrong quickly. Like this, you enter around, when did tap in? It tapped in there at 2 a.m. And you're out at 9:30. How much distance we cover? So almost a 1:1. That also, okay, no, all the other ones were like, that one's infuriating. Okay, we might even look at maybe like Asia requires like a negative R vibes. Who knows? Asia, you won't be No. This is the reason why I was avoiding Asia this whole time. I'm like, I don't like the way it moves. That's my bid time. And you're just incurring losses. What time is this, New York? So if we do end up developing this into a bot to tell the bot, listen, after 8 o'clock, just switch off. Don't trade. Don't trade it. Asia is not looking promising at all for this strat. Are they strats that work beautifully during Asia? Yes, they are. This is not one of them. This is not one of them. Okay, Jack, I don't want to leave, eh? I see why Chris always stays on the stream for so long. Okay, we're gonna do one more. We're gonna do one. The move happens in leisure in New York anyway, right? Nah, bro. Nah. We will be sleeping. We will be resting. I don't think this Asia thing is a thing, ne? But we'll do one more. Let's give the Japanese their fair shot here. Now, is Asian session is it based in Japanese time or Chinese time? And are those two times very different from each other? I don't know. Someone more knowledgeable than me on the subject, please let us know in the chat. Hey, Rux, Asian session saw me once, and that was during the 24-hour stream with Jev. I think it was me, Jev, and I think Miles were the only guys left still on the stream at that time. That was not exactly. Ooh, what happened here? That was not exactly the most. No, New York. That was not exactly the most exciting session to trade, eh? Imagine staying up until 6 and you take. I'm telling you now. I'm telling you now. I would commit murder. I would. The first person to talk shit to me that day wouldn't make it through to the end of that day. I would commit murder. Imagine that nonsense. You stayed up. Oh, you can take a lot. I had a friend, Chad. I first got introduced into trading. I want to say 2021 maybe. And there was a. Okay. Wait. Let me just hone in here. That was the first touch. Close below. Or did that one touch first? Just missed. That one's a touch. Close below. Another rejection. $10 pips below that. Hit the sell. You would swear I stopped talking and got serious because this is a real trade that's about to happen. I'm gonna miss it. Not that everything is paused. It was like 2021. A friend of mine's, a colleague of mine's, boyfriend at the time. Oh, come on, take the win. Yarr! Come on. Don't do me dirty. Just clap it. You absolute twat. Oaks, look at that. Look. Nah, screw Asia. That was literally 7 pips away from hitting take profit. Okay, what time did that start? Until when they clap you out. Deep. At least you would have woken up. What time is this? At like 8, you'd have been like, I'm really close, manually exit, whatever. That is nonsense. Look at that. Okay, that was the last one. So it was 2021. He was telling me how I didn't understand what trading was at all. Like, I had no concept of what this man is doing. He was like, no, man, you know how the rand and the dollar, and it gets more expensive, and then you try and buy it. And I'm like, are you buying dollars? Like, not really buying dollars per se. He tried explaining to me. I wasn't getting it. It looked complicated. I just saw lines on a chart, and I was like, I don't know what this man's doing. Anyway, point of story. Dude worked on the ships for a while. So he got himself quite a bit of cash to sort of trade with. They were trading London. I mean, not London. They were trading Asia. And I'm like, I don't know why you have to be awake at like 12 to do this thing, but whatever. They're trading Asia. And now that I know more about, I don't know why they chose to trade Asia in the first place. I have no idea why. But anyway, I would love to like revisit that conversation properly and pay attention with the knowledge I have now, because it still doesn't make sense to me. But anyway, point of story. I think the man lost something stupid like 20K on a trade in Asia. Whilst I'm like, yo, guys, imagine losing 20K of your actual money at 3 a.m. in the morning. Trading Asia. I would commit murder. And already emotional damage, and it's only back testing. Like I get too. Funny enough, I'm more calm when it's a live trade. I think because I try and like dampen my emotions, because I know it's like, okay, listen, stay calm. Don't even look. I don't even watch the trade happen. Especially if I'm trading the turtle wave. I check the chart in 15-minute increments. As the 15-minute candle closes, I look where we at. Okay, cool. Because it's a little bit of a set and forget type situation. So I don't even, I'm mostly checking the chart to see if it has lost, do I need to re-enter in the opposite direction? That's mostly what I'm checking for. So I'm a little bit more calm, believe it or not, when it's an actual trade. With back testing, I get a little emotional. Dylan, the boys started playing chess. Yes, man. Yeah, that's how boring Asia was. We started playing chess with each other. I still need to challenge Jeff to a chess session. Jeff is ridiculously good at chess. It must be the conspiracy theories in his mind. He's always jumping to conclusions. So don't tell him I said that. 50 pip take profit could work in Asia. I think so. That might be something to look at. Maybe just go for a 1:1. Maybe even look at a negative R. I'm going to continue this trend going forward and see, and then give you guys what the results of that at the next session. But yeah, guys, that was back testing session number 2. I hope you guys enjoyed that. I'm hoping at the end of a couple of weeks, we're going to have this strategy mapped out, fleshed out, all the rules set down on paper, and we can all trade together, make a whole bunch of money, buy some Ferraris, and just be the Turtle Wave gang. So that's the idea. I hope you guys enjoy this. Please hit the like button before you go out. And if anyone is looking for a Vault Funder account, like right there, little discount for you, a little 35% off. I'm actually, I need to, what I'm looking to do is, I want to get to, I don't know, I'll probably get like 5K or 10K accounts, something cheap and small. And I want to start at some point, where are we now, September? Maybe we can do this together. Maybe like in October, do a whole, okay, cool. Here's our forward testing account number 1, forward testing account number 2. One of them we're going to do the 2R strat. One of them we'll do the 1.25 or whatever we end up deciding are the 2 most profitable strats. Forward test them with 2 live accounts and then see and then compare results at the end. Which one can pass the account faster? Which one's more profitable in the long term? Which one blows an account, which is also a possibility. So that might be something cool we can do together. Either 5K or 10K. I'll see what I feel like at the end of this month. When I feel like the strat is like ready to be rigorously tested. But yeah, that would be something really cool to do. Gives you hope and then boom, all gone. Like I'm telling you, man, the strat during Asia, I don't think it's a thing. W Sesh Ed. Thanks, Rox. Thanks, guys, for joining in. Really appreciate the support. Go ahead and like the channel. Or subscribe to the channel, like the video. And I will see you amazing peeps on Tuesday. We'll be doing a little React video. So just to let you guys know what the schedule is. Tuesdays, I'm doing live reaction videos to whatever is popular and funny at the time. Wednesdays are my informational, educational videos. Thursday are these little back testing sessions. So yeah, keeping quite busy. But I hope you guys are having a fantastic one, and we